Satoshi Kusuma's cryptic warnings have echoed across the crypto landscape, and it seems the latest one has sparked a remarkable shift from words to decisive actions. The Shiba Inu community is now in motion, and the unfolding developments are nothing short of fascinating. This isn't just a suggestion, it's a critical move that every Shiba Inu holder should be making. Curious about what's happening? Brace yourself for a revelation that could reshape the trajectory of Shiba Inu. Wondering about Satoshi's master plan? The details are about to unfold. Stay with us for an exclusive update that's bound to leave you intrigued and ready to take the next step. Shiba Inu's value has seen a remarkable 30% increase over the past month, driven by a broader resurgence in the cryptocurrency market and renewed interest in meme coins. The notable 30% surge in Shiba Inu's value over the past month reflects a compelling trend within the cryptocurrency market. This increase is attributed to two key factors: a broader resurgence in the overall crypto market and a renewed interest in meme coins. The broader resurgence in the cryptocurrency market has been a prominent driver of Shiba Inu's value appreciation. The cryptocurrency market is known for its cyclical nature, characterized by periods of bullish and bearish trends. The past month has witnessed renewed optimism and upward movement across various digital assets, with Bitcoin and other major cryptocurrencies experiencing notable gains. This positive market sentiment has likely spilled over to Shiba Inu, contributing to its impressive price surge. Furthermore, the broader cryptocurrency community's growing acceptance of meme coins as legitimate investment vehicles has led to increased trading and investment activity in these assets. Shiba Inu, with its community-driven approach and unique branding, has become a beneficiary of this trend. Concurrently, the quantity of Shiba Inu stored on crypto exchanges has dwindled, fostering optimism that the token will face reduced selling pressure as the market recovery persists. Per data sourced from Glassnode and disseminated by renowned data analyst Ali, an impressive 8 trillion Shiba Inu tokens, equivalent to approximately $88 million, have been withdrawn from exchanges since November. At the beginning of the month, exchanges held approximately $1.8 billion worth of Shiba Inu, and here's something you should understand. Let's put $1.8 billion into perspective with a real-world analogy. Imagine you have a neighborhood where houses are typically priced at $300,000. With $1.8 billion, you could essentially buy every single house in that neighborhood minus 6,000 houses in total. Now let's consider the average cost of a car, which is around $30,000. If you had $1.8 billion, you could go ahead and purchase 60,000 cars. In terms of people, if the average annual salary is $60,000, $1.8 billion would be enough to pay the annual salaries of 30,000 individuals for an entire year. Envision a bustling workforce sustained by such financial resources. Lastly, if we turn to travel, where a round-trip international flight might cost approximately $1,000, $1.8 billion could cover the travel expenses for a staggering 1.8 million people. Envision a vast number of individuals embarking on journeys to various destinations across the globe. Simply put, $1.8 billion is an immensely significant sum capable of reshaping neighborhoods, sustaining workforces, and facilitating extensive travel experiences on a grand scale. And that large amount of Shiba Inu is just sitting on crypto exchanges. Doesn't that blow your mind? Anyway, as I've mentioned earlier, an impressive 8 trillion Shiba Inu tokens, equivalent to approximately $88 million, have been withdrawn from exchanges since November. And this is what's interesting. The decline in the quantity of Shiba Inu stored on cryptocurrency exchanges represents a noteworthy development that has implications for the token's market dynamics. This reduction in available supply on exchanges is a key factor fostering optimism among investors, as it suggests a potential decrease in selling pressure on Shiba Inu, especially in the context of an ongoing market recovery. Firstly, a decrease in the amount of Shiba Inu held on exchanges can be interpreted as a shift in investor behavior. The withdrawal of tokens from exchanges may indicate a strategic move by holders to secure their assets in non-custodial wallets or participate in decentralized finance activities such as staking or providing liquidity. This shift away from centralized exchanges to decentralized platforms can contribute to a reduction in the immediate liquidity available for selling on the open market. Moreover, the diminishing supply on exchanges aligns with basic economic principles of supply and demand. If the available supply of Shiba Inu on exchanges is decreasing, and demand or interest in the token remains constant or increases, it can create a scenario where the token's price is more resistant to downward pressure. This, in turn, can contribute to a more favorable environment for price appreciation. Investors and analysts often view a reduction in exchange holdings as a positive signal, as it may indicate a longer-term commitment by holders to the asset. It suggests that a portion of the Shiba Inu community is opting for a HODL strategy, intending to hold their tokens rather than engage in short-term trading or profit-taking. Sentiment advises vigilance, urging watchers to keep an eye on Shiba Inu, particularly as prominent wallets relocate coins away from exchanges. Meanwhile, it is worth noting that a fraction of Shiba Inu is actively traded on decentralized exchanges, suggesting that not all tokens withdrawn from exchanges enter cold storage. For instance, traders exchanged $1.2 million worth of Shiba Inu on leading DEXs Uniswap and Shibaswap. The observation that only a fraction of Shiba Inu is actively traded on decentralized exchanges introduces an intriguing layer to the dynamics of token movement. This insight implies that not all tokens withdrawn from centralized exchanges find their way into cold storage, indicating varied strategies among Shiba Inu holders. One possible interpretation of this trend is that a segment of Shiba Inu holders prefers to keep their tokens in more active circulation on DEXs, perhaps participating in decentralized finance activities or taking advantage of the liquidity provided by these platforms. Unlike cold storage, where tokens are securely stored offline for long-term holding, trading on DEXs allows for a more dynamic and flexible approach to managing assets. The mention of a $1.2 million worth of Shiba Inu being exchanged on leading DEXs Uniswap and Shibaswap underscores the significance of decentralized trading in the Shiba ecosystem. Uniswap, being one of the largest decentralized exchanges in the crypto space, provides users with the ability to swap various tokens without the need for a centralized authority. Shibaswap, specific to the Shiba Inu ecosystem, further emphasizes the community-driven nature of Shiba Inu transactions. This level of trading activity on DEXs suggests an engaged and participatory community within the Shiba Inu ecosystem. Traders actively exchanging Shiba Inu on these platforms may be seeking opportunities for short-term gains, leveraging the flexibility and efficiency offered by decentralized exchanges. From an investor's perspective, this information could influence decisions about where to trade and store Shiba. Some may prefer the security of cold storage for long-term holding, while others might find the liquidity and opportunities on DEXs more appealing for active trading strategies. Simply put, the active trading of Shiba Inu on decentralized exchanges adds a dynamic element to the overall narrative, highlighting the multifaceted ways in which cryptocurrency holders engage with their assets. It also underscores the importance of considering the broader ecosystem beyond centralized exchanges when analyzing the movement and trading patterns of tokens like Shiba Inu. As the cryptocurrency landscape continues to evolve, monitoring trends on both centralized and decentralized platforms becomes crucial for a comprehensive understanding of market dynamics. And this is where things get interesting. Looks like Satoshi Kusama's words have finally come into reality. Satoshi Kusama consistently emphasizes the importance of decentralization on Twitter. Decentralization, in the context of cryptocurrencies, refers to the distribution of power and control across a network of nodes or participants, as opposed to being concentrated in a single authority or entity. Satoshi appears to view decentralization as a crucial aspect for every crypto project. Through regular tweets, Satoshi advocates for the idea that true decentralization is not only a philosophical goal, but a practical necessity for ensuring the resilience, security, and longevity of a cryptocurrency project. By distributing control among various participants, a decentralized network becomes less susceptible to single points of failure and is more resistant to censorship and manipulation. In recent observations, it seems that Shytoshi's messages about decentralization are gaining traction within the crypto community. People are reportedly taking heed of his advice and, as a result, are beginning to move their funds away from centralized exchanges. This action aligns with the principle of self-custody, where individuals take control of their private keys and assets rather than relying on centralized platforms. The shift towards moving funds off exchanges suggests a growing awareness and acceptance of the importance of decentralization among cryptocurrency users. By doing so, individuals are asserting greater control over their assets and contributing to the overall goal of reducing reliance on centralized intermediaries. This movement may also reflect a broader trend in the crypto space, where users are becoming more conscious of the risks associated with centralized platforms, such as potential security vulnerabilities, regulatory uncertainties, and the risk of losing access to funds in the event of exchange-related issues.